the heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde at Bloomberg's world headquarters in New York.
And I'm Ed Ludlow in San Francisco. This is Bloomberg Technology.
Coming up, we sit down with the CEO of Lyft. That's after the company holds its first ever Investor Day.
Plus, we'll take a look at GameStop as Roaring Kitty goes live with an announcement in just under an hour.
And we push ahead to Apple's Developers Conference with a focus on artificial intelligence. But first, let's just check on these markets. Today, Ed, is a macro day, is a non-farm payrolls day, is a hot labor market day. And yet actually some resilience in the benchmarks when it comes to equities. We're off by just 12 points, even though we see come roaring through 272,000 jobs added. We're going to be digging into it in a moment. But the 10-year yield, the bond market, is what feels the pain. Basically, this labour market's too good. The Fed can't cut, is what the markets start to anticipate, and we're up some 13 basis points on the 10-year yield. We're seeing the dollar index also higher. However, it's notable that even though the dollar is higher, Bitcoin is actually still showing some risk-on attitude. Let's move on and see what Bitcoin's been doing. Over the course of year to date, we are back near those record highs. We're still up 67% year to date. We're at 71,300. That's just shy of the 73,000 record that we've seen previously. 18 straight days of inflows, of increases in Bitcoin, and we're seeing that money moving into the Bitcoin ETF, the spot ETF. So Ed, still watching crypto, but what are you watching on the micro?
GameStop. I want this to be at its heart a beautiful story about a company that sells video games. But it's not. I mean, the stock's down 25% in the session. They unexpectedly announced earnings and said that they would sell an additional $75 million shares. It's been a wild ride this week, and it all centers around Roaring Kitty, a.k.a. Keith Gill, who's due to go live and speak at midday Eastern time. And I think it's important to be honest, Caroline, and say, haven't got a Scooby-Doo what he's going to say or what it's going to be about. And there's a lot of hypothesis out there about his position and what will happen. We will try our best throughout the hour to keep you posted. There are other things we're watching, individual names, but a lot of it's to do with next week. Lyft coming up very soon, going to speak to the CEO. Investor Day, a lot of numbers, but lots of questions about future of rideshare in a world where robotaxi's king. Nvidia's down, stock split Monday, lots of excitement from retail investors about that. Apple WWDC on Monday, Mark Gurman of Bloomberg says we are going to be told something about Apple intelligence. And then finally Tesla up 0.2%. You have your Investor Day next Thursday. I won't be here. I'll be on a beach in the Mediterranean, but it's a big one, and it's a big vote on compensation and the future of that company.
Ed, you better promise me that you're not glued to your smartphone at that moment on that beach and that you take it in over a glass of wine. But meanwhile, let's break down the numbers of what really is the macro story of today. It's the jobs report, of course, dictating trade. Sarah Franklin is with us, CEO of the people management platform Lattice. And Sarah, look, this upended every single Bloomberg economist that we surveyed out there. Every one of them thought that it would be a cooling effect, at least, or not as hot as 272,000. What do you make of it?
Well, Caroline, what I see is unpredictability. Like you said, this was not what anybody thought was going to happen. Everybody was thinking we would have a decrease from April, but we ended up blowing out the jobs report. And so what we're seeing is uncertainty. And we're seeing jobs in these areas of government and healthcare, but it's still uncertain as to what's going to happen.
I'm told that in New York there were audible gasps when the number hit. Such was the surprise of the world. And a lot of our audience will watch and say, well, why do we care? Largely it's because of the Fed, right? The idea that the Fed won't cut rates as quickly as we thought. But we're trying to understand the story in the technology sector. This is what the kind of breakdown looks like. Changes in motion picture through web search. This data, which we've dug into for the quarter, is really interesting. What does it tell you?
So the data is very interesting when you look at this. Like we saw, the healthcare and government sectors have hiring. But as a tech CEO, my vantage point is slightly different. we're in an industry where we're seeing experimentation and change. And this is where we don't know what's fully going to happen. And we're curious, what is the impact of AI going to be on jobs? And what is the world going to be when we see digital employees come into the mix?
Never before has it been so, I don't even know what to say, in vogue or important or cool to be a computer scientist or software engineer. But with that comes demand and a lack of supply probably, so big pay packages. Are you seeing that in your world?
We're definitely seeing demand for engineers and AI data scientists, but what you're wondering is, what does this mean for people that use AI? What does it mean to be a customer support representative or a sales representative? And there's a lot of interesting opportunities out there, but there's a lot of questions as well for what this means for the future of the workforce. And we need to call every company to be transparent and accountable for the decisions that they're making when it comes to their hiring practices, whether it's for people or with digital employees.
Sarah, can you answer some of those questions? What are you seeing for those that work in customer services? What are you seeing for those that are supposedly being augmented and potentially being replaced?
Well, so the Labor Bureau shows that over time we'll see a decline in these positions, and we'll have AI and digital employees being the new professions. We can see a time when we as people will be working together with digital employees. And this is a mind-bending concept, but it is where we're going. And so that's where the jobs report is very interesting, where you see healthcare professionals, government professionals as being the main bulk of these job increases. And then it's still early days, but for AI, it's going to be interesting, and we need to call everyone to have transparency and hold AI accountable for when they do become employees, because you could be a customer service representative and you still need to be held to the same level of goals that a person would be.
Are we still seeing reskilling as a topic and actually being followed through on?
Reskilling has never been more important right now, because you need to be able to transition your workforce into the jobs of the future.
Sarah Franklin, Lattice CEO, it's fantastic to have you back on set in San Francisco. It's amazing to see the world change so quickly each quarter. Come back soon. Now, coming up on the program, we're going to sit down with the Lyft CEO, David Risher, as the company holds its first ever Investor Day. And I know so many of you in our audience had a lot of questions for David. We'll put some of them to him next. This is Bloomberg Technology.
Lyft has been holding its first ever Investor Day this week, with the company projecting gross bookings to grow about 15% at a compound annual rate over the next 3 years. Investors liking that clarity. Let's dig in a little bit more. The Lyft CEO, David Risher, who's here in New York City. It was a big event.
It was.
And lots of musical performances, and then the serious matter of numbers, of margin. What gets you that 15% compound increase? What gets you an improvement in margin and profitability too?
So I don't think you're going to be surprised about this, but the answer is customer obsession is what gets us there, right? I mean, we're a scale business. We do 2 million rides a day today. We're going to get to $25 billion in bookings over the next couple of years. That just means doing more of what customers like, picking them up faster, pricing better, and then innovating, like with Women Plus Connect and some of the other things we've talked about before. It's really the basics, but you do them really well over and over again, and you can grow an incredibly big and profitable business.
I can see that helping bookings. How does it do the profitability? Do you have to start to charge people a little bit more to be able to get that margin?
No. In fact, that's not at all in the plan. Instead, what is in the plan are things like Lyft Media. So this is such an interesting thing. Think about all the different ways brands want to talk to you today. A lot of them are online, right? They're through Google, maybe Meta, whatever it is. Well, we actually have people in cars going to grocery stores. And is that interesting that maybe, Crest versus Colgate, maybe you don't care too much, but maybe there's an advertiser who'd like to talk to you right as you're about to walk into Kroger, for example. So that's part of the way that we can kind of work with margins. We can also work with modes and some other things. A lot of good ideas there.
David, good morning. It's Ed. I'd like to look past the numbers a little bit. I understand the 709 million rides you did in 2023. And you make this argument that your target market or total addressable market is based on the total miles driven in personal cars. But what I don't see is how you're going to go after that addressable market, convincing people not to use their own vehicles, but take you instead.
Right. Well, I don't have to do a lot of that, to be honest. It's 160 billion trips that people take a year. Let's just look at the daily commute. every single year, people commute to and from work 55 billion times. 55 soul-crushing billion times. So you don't have to take much of that to make a real difference in our 700 to 800 million rides. We've got a new product that we're just in the process of developing, for example, that will allow you to lock in your price. So every single day, instead of a price that bounces around, you get a consistent price. And that's something we know people stress about. Literally, people wake up early in the morning just to check a couple of different apps to figure out what the least expensive way to get to work is. So if we can take that off the table, that might increase us by, call it a ride a week. But a ride a week times 52 weeks a year times millions of people, it adds up pretty fast.
David, when I said you were coming on the show, the majority of questions from the audience were about robotaxi.
Yeah.
You and I have discussed this in the past, but Lyft has a complicated history with robotaxi. I think at the core of their question is, will you survive in a world where, Zoox has a really big runway, Waymo appears to have a really big runway?
Yep. Yeah, so we will survive. Let's just take that off the table right now. Because I think the way to think about it is this. It's one thing to create a robotaxi, and both of those companies are doing really incredible work. I'm super, super impressed with the technology and how it's coming together. But it's a very different thing to 2 million times a day pick people up, drop them off, do it in weird weather, do it at airports, and so on and so on. And so I think it's a much more likely scenario that one displaces the other, that actually we work together, right? That we end up welcoming them to our network. Because if you're a robotaxi company, and I know you've taken, for example, the Zoox robotaxi, gosh, you need a lot of volume to really drive the numbers. Otherwise, you make 10 cars, it costs you, $10 million a car. It doesn't make any sense. So you got to have someone like us as a partner who can really incorporate them into our network. And I think that's the most likely scenario that, a bunch of different companies I think they're going to work on.
No soul-crushing commute for Ed when he's in that Zoox, playing around with that. David, I'm interested in, you can work together with robo-taxis, but you're not going to work together with Uber. And I'm interested as to, ultimately, they're really focusing on this advertising focus too.
Yeah.
Is there room enough for both of you? How are you going to compete for that?
I don't think we have to compete for that. Because I think this, one of the things I learned from Jeff Bezos is work on things that are durable. If you're going to build a big business, work on something that's durable. Okay, I can predict in 5 years, 10 years, 100 years, there are going to be companies like the ones we work with today. Chase, NBC Universal, Delta with their SkyMiles program, Kroger, IHOP. These are 5 companies that we're working with today. Every single one of those companies or their siblings or their brethren are going to want to talk to customers in new ways. And we've got 2 million rides every single day. So no, I don't think that this is one of those zero-sum things. I think actually this is a whole new category of mobile advertising. I think we're going to get there first. I think we're going to do it better. But if other people want to follow us, then more power to them.
You, of course, worked for Amazon. You worked for Microsoft. You learn a lot from those businesses. And both of those are plowing forward in artificial intelligence. I'm sure you are too.
We are.
How much can you use my data as a Lyft user to dictate what ads I'm seeing, make it more specific for me, without weirding me out?
So, great question. I would actually turn it around a little bit and say, of course, artificial intelligence is going to revolutionize a lot of different businesses. I would start actually with our drivers. Look at all the different ways drivers interact with our platform right now. By the way, 41% of our drivers don't speak English as their first language at home. So imagine a world where artificial intelligence can help with simultaneous translation. Every single one of our drivers wants to earn more on our platform. Imagine a world where drivers can use an intelligent assistant to help them figure out how to spend their time so they can earn even more on the platform. And then you get to the targeting side. And our goal is going to be to make the targeting so seamless, you think of it as a benefit. You're like, oh, wow, this is fantastic. I'm literally getting a coupon off of my favorite. What's your favorite toothpaste, out of curiosity? Do you have one?
I'm using some weird one made in India that doesn't have fluoride in it. I've gone into that big rabbit hole of
You're one of those people. Okay, fair enough. Well, you know what? I use a product called David toothpaste. I don't know if they're on the line now. I hope they become a sponsor.
Sorry, you've got a personalized...
It's not personalized. It's just pure coincidence. But they're also, I think they have a different formulation than fluoride. I don't know. I'm not so focused on that. But it's a very nice tube, I can tell you that. So imagine I'm going to CVS and I get $5 off my David's toothpaste instead of the big, long, ridiculous thing that you get after you check out there. I think it's a better experience.
David, on the AI note, I got a very specific question from an audience member on X. How is Lyft leveraging AI? Is it truly a buzzword for them, or are they really making use of it in a meaningful way? And you gave the example, or a couple of examples there from the driver's perspective. What about the rider's perspective, and what about your internal use?
Sure. So all three, right? So internal is really about productivity and quality, right? We use AI to check our code. We use AI to come up with different ideas sometimes as kind of idea starters. Anyway, a lot of interesting things there. For drivers, I just mentioned, a great way, I think, to sort of maximize earnings as an example. And I think for riders, imagine a world, here's a scenario that I bet has never happened to anyone listening. You ever leave your iPhone in the car? And how fun is that experience? Just, 2 minutes later when you realize you don't have it. Well, AI is pretty good at detecting patterns and understanding that, gosh, the car is moving one way, you've just gotten out of the car. What's going on here? Maybe it can reroute the driver back to drop the phone off for you. So I think, look, you can overhype AI. Maybe it's not going to cure cancer tomorrow. Probably isn't, to be honest. But I do think that every single day, if we're customer obsessed, and that's going to be our focus, customer obsessed AI, we can use it in really innovative ways.
Lyft CEO David Risher, thank you so much. We appreciate you coming into our world headquarters.
Always a pleasure.
In New York. Okay, time for Talking Tech. And first up, SoftBank-backed travel app Yanolja is said to be planning a $400 million IPO in the United States. Sources say the South Korean startup is eyeing a launch in July with a valuation of between $7 and $9 billion. A final decision has not been made, and details of the offering could still change. Plus, AI startups in Silicon Valley are stepping up efforts to stop a California bill that would place public safety guardrails on AI, saying it would curtail innovation. The bill aims to mitigate catastrophic risks posed by future AI models, such as weapons development. The measure awaits action from the State Assembly, which has until August 31st to pass the measure. And UK tech tycoon Mike Lynch has been found not guilty of criminal charges. Lynch was accused of using accounting tricks to dupe Hewlett-Packard into buying his software startup Autonomy for $11 billion in 2011. The outcome marks a redemption for Lynch, who for years argued that he was used as a scapegoat for the deal, Caroline.
Extraordinary, particularly anyone who's reported on the UK tech scene, such as both of us have. Let's talk to Rachel Graff about this, because, Rachel, here's a man who advised several prime ministers in the UK, was a pin-up for what entrepreneurship could be, and then he completely fell from grace. Is this the redemption?
I think it is. He was found guilty in a civil case in the UK. He's still facing potential monetary fines for that. So he's not completely off the hook, but it's a stunning victory for him in the US.
What did the judge say? What was the legal reasoning that came to the conclusion of not guilty?
So it was actually a jury here in San Francisco, and after the verdict, the jury said they didn't find a whistleblower at Autonomy who says that he alerted Lynch to the fraud and was then fired in retaliation. They didn't find him to be particularly credible, and they didn't think that the government proved beyond a reasonable doubt that Lynch was directly involved in any fraud.
When I was reading your reporting, Lynch and his legal representation team said, well, the first thing I'm going to do is go back to the UK. Mm-hmm. Do we see the prosecution try and do anything as a next step, or?
The judge yesterday, after the verdict, held another hearing saying that Lynch he's free to go home, basically. He was under house arrest and 24-hour supervision here in San Francisco during the trial. The judge lifted those restrictions, and so he's free to go.
So too was the VP for Finance as well, who's also cleared, who said basically he'd been robbed of 10 years of his life. Audible gasps, crying when the judgment was read out, Rachel. Ultimately, what does this mean for HP as well, when basically put on them as to what happened with the unraveling of Autonomy's market capitalization?
Yeah, so HP was not a defendant in this case, but one of Lynch's arguments all along has been that HP made a bad deal, and they've been trying to scapegoat him. I mean, it was an $11 billion deal. They had an $8.8 billion write-down the year later, and he says that's on them. It was a bad deal. It's not his fault, and so it's not good for HP.
Bloomberg's Rachel Graff. Great job. Terrific reporting. Thank you very much. Let's get to another important piece of Bloomberg reporting and Bloomberg's Brody Ford. And this is a really interesting one, mate, because you have lifted on the lid on a company I find quite mysterious, Oracle, and their contract with the U.S. Department of Veteran Affairs. Just explain the basics of your reporting.
This is one of the biggest federal IT tech contracts ever. $16 billion to modernize the Veteran Affairs, back-end medical records system. huge undertaking, lots of money involved, was given to a company called Cerner, now acquired by Oracle. And this contract has had a lot of controversies, and they've had a lot of difficulties implementing it. They've had some highly publicized patient deaths, outages. And Oracle has said that, hey, look, you're renegotiating it, but we can handle it fine. We're improving things are going well. What we found in these documents is that satisfaction rates among users of this new system are lower than any other system they have data on. I think it's like 19% of doctors and nurses are happy with the system, say it can provide high quality care. And so these numbers reveal to us that, again, one of the largest tech contracts in government history is really going much worse than we realized.
You've actually been relentless on this reporting, Brody, in terms of highlighting that this Cerner part of the business is just not going as well as many would have anticipated. They're losing market share, was one of your reports, and ultimately the way in which they sort of adopted the business. Last thing we knew, Larry Ellison was going to be moving to Nashville because he's becoming much more of a healthcare company, but this doesn't seem to be in line with that.
It's a long history of tech companies thinking they can break into the health market, right? When Oracle bought Cerner, they said that we're going to be able to expand our earnings massively. Reporting we have shows that a couple years out, the revenue is down in large part because of this VA contract that's been on pause. So yeah, I mean, this is a classic tale. Amazon's been there, Google's been there, Apple's been there, where healthcare is a hard nut to crack, and folks continue to learn that.
Does Larry refocus, therefore, on the gift that keeps on giving, which is artificial intelligence, and repivot away from being all things digital health?
Well, one thing is that when it comes with this digital health system, a lot of data. And so a lot of people figure that all of the patient data in here, this could make a really good AI system at one point. We don't have it yet, but 5 years from now, I mean, their long-term vision for modernizing Cerner is genuinely compelling, and obviously we know that the health system is not doing well. I mean, we could certainly use a better solution. So I think, as you say, with all the data, the long-term vision is compelling. The near-term difficulties have been much more than it seems they anticipated.
Brody, great reporting.
Thank you.
Always on Oracle. Thanks for coming in and talking us through it. Brody Ford there.
Welcome back to Bloomberg Technology. Ed Ludlow in San Francisco.
Caroline Hyde in New York, digesting a very strong jobs report. Let's get to the markets quickly because it's a macro kind of a day when you have 272,000 jobs added, much higher than any of the economists we surveyed thought. And we're currently seeing, therefore, actually the NASDAQ being pretty resilient in the face of a very hot economy that maybe the Fed can't cut into, but the bond market less so. Look, Ed, we're seeing about 12, 13 basis points add across the curve. I shine a light on the 2-year, but similar moves to the 10-year as well, as we anticipate maybe the Fed can't cut in the way that the market had anticipated. I'm looking though at Bitcoin also shaking off some of this worry that good news is bad news, because we are risk on. Once again, 18 straight days of gains for Bitcoin. A phenomenal run streak that we've seen at the moment. We're up another 0.5% near that all-time high. Move on and see what's happening on individual names. Look, it's a jobs data kind of day. I wanted to shine a light on ADP because actually this particular data provider, HR services, it's the best performer on the NASDAQ 100 today. We're up more than 1.6%, which shows that actually nothing's moving that much. However, they are showing from Bloomberg intelligence analysis that they're going to be really resilient within their market share area of HR opportunities. I'm looking at what's happening with NVIDIA. After the bell today, that is when you suddenly see your one share divided into 10. We've still got the same overall value of the company, and maybe retail investors get back into the name, but we have had such a run in this. Of course, we know that it's up near $3 trillion. Maybe we're just taking some profit ahead of that retail event. And I'm looking at what's happening with the retail frenzy that is GameStop. We are down, down, down today. Look at it, down by 19%. That on the basis of fundamentals. Let's also then dig in a little bit more on the fundamentals, the fact that their numbers are not living up to those two analysts' expectations, but actually there's a lot more than fundamentals on this particular company, Ed.
Is it? Is it fundamentals? GameStop is a company that sells video game stuff and memorabilia in physical stores and haven't got a clue really what's going on. One person who does is Bloomberg's Bailey Lipschultz, the GameStop meme stock czar of the Bloomberg newsroom. So Caro's right. They surprisingly release earnings. They do an equity offering, and Roaring Kitty is going to speak in 28 minutes' time. Explain what's happening, please.
And so much is going on. So we'll start from the top. The stock was up double digits overnight and into this morning after rallying about 50% yesterday as Keith Gill teased a return to YouTube for the first time in 3 years. We then saw GameStop pull forward earnings. It was scheduled for Tuesday. They surprise released them this morning and then quickly announced that they will launch an at-the-market offering that could sell another 75 million shares, which on current levels for that stock could raise close to $2.7 billion. Again, they did this back in May, raising almost $1 billion after Roaring Kitty made a return to X. So all eyes and ears will be glued, as you mentioned, in 28 minutes, 27 minutes onto Roaring Kitty's YouTube page to A, confirm if it's still him, and B, try to get some sense of what's going on with his investment, which he's touted on Reddit and also has really posted over the last 4 weeks, pretty nonstop on X.
And that could be worth almost $500 million now, according to your maths, when you're looking at the overall holdings of shares and options. There's so many directions to go here, Bailey, because we could focus on the fact on whether GameStop itself is exploiting this moment and shareholders by diluting them yet further, or whether they're being savvy. We could also dissect the fact that here is Keith Gill potentially, even manipulating the market. That's something that we're starting to hear talked about.
Yeah, that's a concern. We've seen the Wall Street Journal reporting that E-Trade is considering banning him from their platform, which makes me feel a little bit better if they're in fact actually can confirm that he is taking these stakes and making these investments in the company. But Caroline, the main thing that stands out when you look at kind of the concern around market manipulation, when I talk to securities lawyers, you need to be able to prove an intent to manipulate the market and follow through on that. So far, he hasn't sold the stock, as far as we know, according to those screen grabs. He hasn't done anything with those options. So it's really a weird area that has not really been discussed in the past. But one thing that did stand out when I was talking to an investor this morning is he said back in 2021, a lot of us thought it was funny. No one's laughing right now. The SEC seemingly is investigating, and E-Trade, obviously, and Morgan Stanley are looking into it.
I actually get all of that. I think it's worth a bit of a history lesson here. So, I joke, but GameStop is a physical retailer of video game stuff and associated memorabilia. And, as depicted in the film Dumb Money, when Roaring Kitty, aka Keith Gill, started all of this, his explanation was, as Caro pointed to, he believed in the fundamentals of the business. Just give us that historic context, Bailey.
Yeah, if you go back to 2020, Ed, sales were slumping. There was a lot of uncertainty around what the fundamental argument for GameStop in a world where people are increasingly downloading video games is, and how the COVID dynamic would actually shift that, because if you play a video games on your PlayStation or your Xbox, you don't have a need to go into a physical store to buy those games anymore. His argument was that the stock was so beaten down that there was an opportunity. He also was the first to call out the fact that about 140% of shares were sold short. So a short squeeze had kind of been ripe for the opportunity. He also kind of tailed the investment from Ryan Cohen, who's now the CEO, that he took in late 2020 and then added to in 2021 when he ultimately took over the board. So when you look at the history of Keith Gill's position back to 2020, when people really were ignoring him because the stock was going down and he was just someone on YouTube talking about investing in the stock, some of those aspects did kind of come to fruition. The main thing that analysts and investors point to now, though, is the stock right now was trading with a north of $15 billion valuation. So the argument that his deep value analysis that played out is kind of potentially overdone, just given the fact that the fundamentals of GameStop, as we saw with the quarterly results, are not improving. We do not have a real argument for what the path forward looks like from Ryan Cohen. And when you look at it on a fundamental basis, which analysts prefer to do, there's a lot of uncertainty in just how you could get to a $16 billion valuation given drying and slowing sales in a market that seemingly is continuously squeezing GameStop out.
A whole 2 market analysts rate this stock, I believe, and it's currently trading at a forward PE of 3,695. Go figure. Bailey Lipschultz, no one's laughing this time, especially, well, it wasn't the hedge funds last time either, was it? We appreciate it. Meanwhile, Apple, let's talk about that, because they're introducing a new homegrown app next week called Passwords. Look, it's an effort to make it easier for customers to log into websites and software that's according to sources. Let's bring in Bloomberg's Mark Gurman for more on this. And look, plenty of people out there use LastPass, 1Password, and it's clunky, but it kind of makes us feel satisfied we've got enough protection. What is Apple offering here?
Yeah, so as part of the company's next operating system updates, they're going to launch a whole load of new features, from AI to new types of emojis to new texting features. But one new application at least will be part of the story. That's passwords. It's going to be a competitor, like you said, to 1Password and LastPass. It'll be a dedicated app where you're able to store all your login information for websites, secure Wi-Fi passwords. You'll be able to use passkeys, which is a new initiative from Apple, Google, and a few other tech companies, where you use Face ID or Touch ID in lieu of a password. And it's sort of this encrypted phrase that's stored directly on your devices, so it'll support that as well. And the idea here, like you said, is going to get more people to securely encrypt and store their passwords. And this is going to be stored using a service called iCloud Keychain. This has existed for some time on Apple's devices. Before, to access your passwords, you had to do so from an interface within the Settings app. Now it's a standalone dedicated app, and that's probably going to boost usage quite considerably of their password storage service.
Mark, Apple WWDC on Monday, you've reported that we will get something called Apple Intelligence, and finally Apple will show its hand in the generative AI era. Give us your preview, please.
Apple Intelligence, that is going to be the core element of WWDC on Monday. Obviously, the passwords thing I talked about is only going to be a small bit of that. Apple Intelligence is Apple's push into artificial intelligence. The plan is to add AI everywhere, infuse it with all of their core applications, messages, Safari, mail, notes, calendar, voice memos, reminders, music, pushing AI everywhere in a very privacy-conscious way. Now, in terms of Apple's own in-house tools, there's not going to be a ton of generative AI. For the generative AI component, that's where they're going to be really focused on a partnership with OpenAI, having a generative AI chatbot, basically a bespoke version of ChatGPT within the iPhone on-device Spotlight search engine, right, and components of Siri. So you're going to get in-house, on-device, large language models from Apple to power the AI within applications. You're going to have an iCloud-based infrastructure using Mac chips to power more components of the AI initiative. And then you're going to have OpenAI to power the generative AI part of the initiative. So this is a three-pronged approach. Apple believes it has a strong story to tell. Personally, I think they're playing a lot of catch-up here with their AI initiative. But again, they have a user base of over 2 billion devices. And so overnight, they are going to naturally become the open market leader of artificial intelligence.
Bloomberg's Mark Gurman, an absolutely astonishingly detailed WWDC preview, and you're often absolutely spot on. We look forward to it. Coming up on the show, we're going to bring an end to our New York Tech Week coverage and sit down with one of the city's most valuable startups. The president of Data IQ joins us next. This is Bloomberg.
Oh, New York Tech Week. It's coming to an end after the technology industry in NYC has gathered for a week of events, of panels, of conversations, of parties, and I'm pleased to say, not too exhausted by it all. It's one of New York's most valuable startups. Joining us now is Data IQ President Krish Venkatraman. Data IQ is actually a leading AI machine learning platform for enterprise companies. Basically, you're selling universal AI platform. You help governance with cost management, with security of generative AI applications. You're based here in New York. Interestingly, you've also got a hub in Paris.
Yep.
Why these two ecosystems? What are they doing for you?
Yeah, we were actually founded in Paris. Our founders were all French, either mathematicians. And France is becoming, especially Paris, is definitely becoming a center of AI. Great education. And if you talk about regulation, of course, we're talking about AI, you have to talk about regulation.
Yeah.
The Europeans tend to be a little bit ahead of the curve in terms of regulation. And of course, a lot of the regulatory aspects of where Europe is actually heading towards will come to the US, will come to Asia, just like GDPR. So actually seeing what's happening in Europe, especially on AI, is going to be critical for global enterprise companies.
And therefore it helps if you're selling them governance and ways to sort of look around corners. But does it also then make the future opportunities a little bit slower to take the bite? Are CEOs a little bit nervous about jumping full into generative AI?
Now, I think we largely sell to enterprise, and you can't find an enterprise company which is not regulated, right? Whether it's oil and gas, insurance, financial services, you name it. And instead of thinking of governance as more like a lack of innovation track type of concept, I think finally we started to think about governance in a little bit different way. So we at Dataiku are talking to our clients, and we largely sell to very, very large enterprise companies. We have over 10% of the global 2000s, for example, very, very complicated global businesses. And we're really trying to educate them in terms of what governance, what regulatory aspects that they have to actually tackle right now. Because as you correctly identified, if CEOs think, hey, this governance thing is going to be very opaque, I really don't know where to invest, how to invest, and let's be honest, AI is not cheap. It really requires a rethinking in terms of how they actually distribute their either data or IT budgets. But I think we are doing a very, very good job of actually going ahead of the curve, really speaking to them so they actually can create those guardrails right now in their organizations. And for AI to really be effective and not think about AI like something like everybody can use in enterprise, we have to completely rethink who are going to be the users of AI. Yeah. It's not only going to be the data scientists or the data engineers. Yep. You don't need a PhD from Stanford to actually figure out AI. We have to rethink how the whole concept of AI is going to create value.
Well, Krish,
yeah. Ed.
You said it just then, AI is expensive, right? And we reflected earlier in the show in the context of the jobs data that there are a finite number of computer scientists and software engineers from Stanford or otherwise.
Yep.
Are you able to get the people that you want in New York and in Paris? And are you paying them over the odds?
I think we have to think about AI completely differently. I think right now we are thinking about AI really from a lens of compute and the hyperscalers. And if what we do and what we do really special in Dataiku, and I'll go back to your question, why we can actually go attract really high quality talent, is we think of AI as something that everyday users in an organization should be using. So not only the data scientist, but the person who works in finance, the person who works in HR, the person who works in legal, the person who actually works in manufacturing. Those people don't need an advanced degree to really take the value of AI, because right now what we are seeing behind the scenes in terms of AI, most of the investment and the value creation, both for companies as well as for investors, is going to come in the application layer. Mm. Just like in the early days of the internet, we put a lot of fiber, right? We built a lot of large data centers, but the people who really created value are, in essence, the people who actually created the application. And similarly here in AI, you'll actually see that we hire both scientists as well as regular folks, because they are the people who can really understand the needs of the end user and actually can drive sale.
I'm sorry to cut you off. We got to go. Dataiku President Krish Venkatraman, great to have you on the program. Thank you. San Francisco's mayoral race is ongoing. We've been talking to some of the candidates about their vision for the future of this city. Some say its tech-centric nature needs to be harnessed. Others say it's too tech-centric. Let's get the view of another candidate, Daniel Lurie, founder and former CEO of Tipping Point Community. And Mark Farrell has been on the show and basically said we over-index historically to tech, but they've left. We desperately need them back. You share that view, but you want to specifically focus on the corner of the technology industry that's looking at green energy and climate.
Well, first, Ed, thanks for having me. San Francisco is coming back. There is not a question in my mind. This race is about how quickly. I'm running against a number of City Hall insiders who, frankly, got us into this mess, and it's not going to be done by anyone from inside that building. It needs accountable leadership. It needs new ideas. I'm excited today to talk to you about my proposal to bring a climate innovation hub here to San Francisco. Ed, you've just had many guests on talking about AI. San Francisco is already the center of AI. but we need to marry that with...
I've heard that a lot with respect, Mr. Lurie. What are you actually going to do? You know, what is a concrete policy that's going to get a company to say, yeah, you know what, he's going to fix the city?
First off, we're coming back. We have the best research institutions. We have Meta, we have Google, we have OpenAI,
but that's not a policy.
And we have open office space. We have 22 Salesforce towers of open office space. We have to streamline permitting to invite clean tech companies back here. You need a mayor with vision that no longer is going to say business is a bad word, but we're going to embrace tech, clean tech. We need to do this. We need to do it with new vision and new leadership, and that's what I bring to this race.
What kind of, I guess, coalition are you building, Mr. Lurie? You know, who are the companies and existing industry leaders that you feel are backing you?
Well, I have a track record of bringing together the business community, the nonprofit community, the civic community. Mayor Ed Lee actually asked me to chair the bid for Super Bowl 50 back in 2013. We had to go up against Miami. I led the cheerleading for that effort. We won the rights to bring that game here. We brought $240 million worth of economic revenue to San Francisco and to the Bay Area. And guess what? We created the Bay Area Host Committee. We got the NBA All-Star Game coming here next year. We have Super Bowl 60 coming back. We have 6 World Cup matches coming here. The eyes of the world are going to be on San Francisco again, but we have to do the basics, Ed. We have to have clean streets. We have to have safe streets, and not just when the JP Morgan Healthcare Conference is in town or APEC is here. Simply put, we need new leadership, and that's what I provide.
There's a political risk here that it's not just mayoral candidates coming up, but there's also a presidential election that might not be that supportive of climate tech. How do you ensure that we're not going into a bust situation, that you're betting on the right ecosystem here, Daniel?
Well, listen, we all know we need to have decarbonization. We have a climate crisis. We all know that. When you're looking at companies like Meta, Google, they need more energy, they need more power, and they have their own climate goals. And so this is a technology that is just getting started.
I'm sorry to interrupt, but I just want to get to the idea of what the city will become.
Yeah.
You know, one vision associated with your name is Wall Street for climate tech bros. Is that a fair label?
No, listen, this city needs to get back to its roots. We need to be focused on arts and culture. We also need to embrace business as well. For us to be a great American city, we also need the tax revenue that we have lost. Under the current leadership, we have seen businesses fleeing this city. It's time that we go win business back. I've done it before, and I'll do it again.
San Francisco mayoral candidate Daniel Lurie, grateful for you coming into the studio.
Thank you for having me.
And as and if the race progresses, come back again. Caro.
Fascinating, the way in which cities continue to evolve. We've talked New York, we've talked a bit of Paris, San Francisco, but look, this is the end of this edition of Bloomberg Technology. A lot to look forward to for next week and indeed in a few minutes' time.
Yeah, I mean, just incredible what's happening next week. NVIDIA, Apple, and Tesla. I'm away, but Caro, you got this, and in many ways I'm envious. Check out the pod, you know where to find it. From San Francisco and New York, this is Bloomberg Technology.